Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I've been a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel, as always, joined by Joel Elconin and Dennis Stick on this show today. Well, I guess it was a little bit of a washout day like we discussed on yesterday's show. So we're going to talk about just the buying action and the growth names yesterday that were down in yesterday's pre-market and then rallied in yesterday's session. So we'll talk about that. We'll talk about how we sort of recognize that on the show yesterday and what we can expect going forward. We thought it'd be a quiet day, but it seems like we're still going here with the volatility, at least until the holiday. We have Foot Locker earnings up huge. We have Deere earnings. Not a lot in ratings land. Our guest today, Ian Weiner, will join the show. He is the former director of equity trading at Wedbush Securities. He walked away from that about, I don't know, like a year ago, maybe a little bit less. And we're going to get his perspective on if not the markets, then just life as a whole and kind of why he walked away from the street. And we'll see how that goes. That'll be at 8:35. Today's show is sponsored by Wealth Venue, the autopilot investment platform for everyone. Pulling them up on the screen right now. Wealth Venue will structure, trade, and rebalance your investment portfolio so you don't have to worry about making the right investment decisions. So to learn more, go to wealthvenue.com or click on the link in the chat as I'm putting it there now. And with that said, Joel, what's the word here in the S&Ps here this morning?
We got a nice old rally here, up 25 handles at 26.65. We had a little dip off the 6 p.m. open, which I wish would have happened today. We went down to 32 and a quarter. 31.75 was yesterday's low. Turned around, headed north. Your pre-market high, 66 and a quarter. I don't think that's going to be your high for the day. My first target on the upside is 2670.75. That represents Tuesday's intraday high, and that is the high between 9:30 and 4:15. Tuesday's close and Wednesday's high way up at the 26.96 area. Not that bullish today, but we'll see what happens at 26.70.75. On a pullback, I like to see this mid-range, but mid-range is way down to 26.49 and a quarter. Crude, what a crazy day in crude yesterday. Just got whooped up intraday, went down, made a new low for the move at 52.77, but on the rebound, hard to find a level here because yesterday's high was 57.44, but I'll just use $55 because that was the area of the former low of the move. Old support, new resistance here for crude oil. Gold up 310 at 1224.30. Silver hanging out up 15 cents at 14.42. And Bitcoin, a little bit of a rally here, not much, up $140 at 45.05. Triple D, I just have to thank you for the input that you gave. Was it on the pre-market show or was it the end of the day? I can't remember.
That was at the tail end of yesterday's show.
Yesterday's show.
I came in for 5 minutes. Or actually, I think it was almost 10 minutes. We stayed a little bit longer. So I did come in. I had so many positions, guys. And, obviously, I try to do the show every single day, but sometimes my trading just has to take precedence. When you're seeing these wild, violent moves here, I've got to focus on the trading. And, that's why, if I can come in for 5 minutes, I will. And most of the days, 99% of the time, it's good. But this market's just crazy lately, and that's why I've been taking the odd day where I've just got too many trades on to do the radio show. And my cardinal rule is don't try to trade stocks to do a radio show. I can do a few trades on every single radio show. There's probably 3 or 4 trades I'm making. I'm making a few trades, but I'm making trades. When the morning's like that, every sometimes a couple of minutes. So I just don't have the time to come on the radio show. But it was a crazy day yesterday. Let's go into the recap. Let's recap it.
Spencer, you want to start out? You want me to do it? You prescribed, attack washout on the open, and you got that. And
yeah, I nailed it.
Yep.
And I got paid for it too.
Did
So
you go naked?
and let's just go into that. So, I came on the show at 8:55. I actually tweeted out too. I was tweeting with another person, but, I said, it feels like a washout. And one thing, I would say, like, I've been trading professionally for 20 years, making hundreds of trades a day for 20 years, some algorithmically, a lot manually. And I have something, just after years, like it's like after so long in trading, you get a really good feel for the markets. And you see stuff as like, oh, I've never seen this before. Well, yeah, in the last 5 or 6 years, you haven't seen these crazy washouts before. But let's go back. Since I started in 1999, we've had some crazy down markets back in the financial crisis, back in the tech bubble burst, back in the European crisis there that we had like 2011. There's been times, and it just after so long, you got to just go back, and remember, like it. And I was saying to this one of my buddies at Bright Trading, it's like you just got to remember back to when you had crazy moves like during the financial crisis. We're not at that level, but we were yesterday morning. It was like a financial crisis day, and it felt like, okay, this is the washout day, especially on a stock like NVIDIA. And I think I mentioned this. I know I mentioned on the pre-market show, and I think we were talking about it on the show as well. I was mentioning specifically, I said, if you are a long-term investor and are looking to put capital to work, I said, now is the time to strike. This feels like a washout morning. And I said, I think these things are going to open really weak, but I think they're going to bounce back. That was, you can rewind the show and listen yesterday. It's exactly what happened. I was taking some people giving me heat for that and saying, oh, well, the S&Ps are making new lows. Yeah, but we were talking the tech, Rick. Yeah, the S&Ps didn't really rally that much because they had a lot of other value names bringing it down. But don't kid yourself. That was a washout low for stocks like NVIDIA, for stocks like Square, the stocks like Twilio, the stocks that have been hit so hard. You've got them now opening down 10, 12% on a day the market's down 1%. That was the washout. That was the washout low. I think that was the temporary low for all these stocks. I don't know if it's going to be the low because we can't, I'm a trader and a short-term trader. I can't predict what's going to happen 2-3 weeks out. Anybody that says they can, I don't believe that at all. But it is easily to predict the next couple of minutes or the next, sometimes the next few minutes or even the next hour, or sometimes the next day. It's even been tricky day to day in this market. But you could just see this was the capitulatory event that we had been waiting for on the Momos. It was NVIDIA opened basically at the lows, Square opened basically at the lows, Twilio opened basically at the lows. All these stocks bounced huge in the first hour and a half, and the market started rolling over. S&Ps and Qs actually started making new lows. Well, actually, not the Qs, but the S&Ps started making new lows. But those stocks held on. Look at the charts, Joel. Bring them up, the intraday chart for Square. Bring up the intraday chart for Twilio. Bring up the intraday chart for NVIDIA. As the S&Ps were rolling over in the afternoon and we touched that new low, these stocks wanted nothing to do with it. They would not go down. And that's the sign that, hey, there is buyers now underneath demand all of a sudden, people who believe they missed the bottom and they did. And those stocks are the leaders here today again. You're seeing NVIDIA trade up another 6 points here. You're seeing Square trade up another 4%. You're seeing Twilio trade up another 4.5%. These stocks are obviously moving a lot more than the market, but it was the washout yesterday morning. And, the only regret I have is I was so busy with my trading portfolio. I didn't get any orders on in my investment portfolio. I wanted to get away. I was like, I would love to put a few orders out there. If I would have had an assistant, maybe you could have did that. But I was just so busy with my trading portfolio, I didn't have time to go and throw out some lowball or throw out some bids in my investment portfolio because you would have got almost the lows on all those stocks.
I just want to walk through the NVIDIA because that was the big dog, in the market yesterday. And just a couple things. When I was looking at the pre-market action, a lot of times what you like to see is, okay, it had the big drop, but there was someone lurking in this stock, 140. I mean, it was going down, but they were hitting bids to go down. It wasn't a vacuum. We were just trickling down, and you actually made your low for the day. Well, the low in the pre-market was 133.23. Your low for the day was 133.31. So if you were leaning on that level, you were trying to buy that level, you didn't get it, right? So if you did have the gumption to just, throw an order out on the open, another thing that Dennis talked about was after 15 minutes, a lot of times, all the inefficiencies shake out, right? If you would have waited 15 minutes in NVIDIA, and you would have said, wow, well, just rallied, $8-9. I can't buy it now, right? Well, you look at the close of the first bracket was 141.90. The lowest it traded after that was 141.51. So even if you don't have the gumption to just get in there and just buy the open and hold, let things shake out over 15 minutes. I mean, you could have used a buck stop or $2 stop or whatever. But at that point, there are a lot of people that sold it in the hole and they'd rally for, it was a little bit different for me because I'm not as tech savvy, but I had a target in the S&Ps on the downside. I had a daily low. And then, when it got down to that area, sometimes the market, even though it's a fast market, sometimes it's like in slow motion. And I was looking, I'm like, okay, well, these were the lows of the move in these stocks. It was 20, 30 cents away. I had levels to lean on, and, it turned out. I was very prepared for it to drop another 30 handles and test the actual low of the move. But, in that scenario, I took a look at the levels. I knew where my outs were, and then, kind of caught a break with the market. Today's a lot trickier. Because you're in no man's land. I mean, you have yesterday's high at
way trickier,
26.70.75. That was the intraday high. I have a target of 84.50. I mean, that's only another 20 handles away. But my weakness is here is like buying a pullback. Like I'm looking at the 50% retracement on the day, and that takes you down to 26.50. If we drop 15 handles, I might be the most bearish guy in the place, but there's going to be a lot of volatility, different volatility on the upside. But right now, my main focus is taking out yesterday's intraday high at 2670.75.
And Dennis, you said this on, I think on the pre-market show that, or maybe you said it just now, everything moves, nothing is new, right? History repeats itself. And that's why, excuse me. That's why I think I was, I don't remember what day it was. If it was Monday, it could have been last Friday. It was maybe the most hysterical, maybe is not the right word, but upset that I'd ever really heard you before, because you were so upset about just the correlations going out the window and how it made
it was something I hadn't
and how it made no sense, but it came back.
But then it worked out. So it's funny, and it was just and sometimes in the pre-market, the arbitrage is somewhat there in the pre-market, but it's not like it is. You don't have all the stocks open, so somebody that's running the pure S&P ARB, and they're doing the 500 stocks against the SPY. I mean, you have literally no market probably on 200 of them. So it's a little bit of a guessing game. And that's why, once the stocks are open, you have a market and there's no more guessing. So the ARB can just run, the bot can run. But the majority of your arbitrage bots are not going to run during the pre-market. Some aggressive ones will. And, I run it because we know, Joel, that if you got the top 20 components, you got a pretty good feel for the overall S&P. Like what have we said? The top 10 components are over 20%.
Yeah, well, we had to adjust it a little bit. You get the top 20
in there, and they're pretty active. If they're trading pretty active, you could get a pretty good feel for where the index should be. But yesterday, I was looking and I was saying it. I was like, and going back to that Apple day too. We can talk about that in a second. But we were just down so much on some of these tech stocks. I'm like, the index aren't down enough. We're not down enough in the pre-market. It opens, and how does it do? It corrected immediately. Why did it correct immediately? Because the index is too high, because we're only down, 1.5% on the Qs, and you got stocks in the Qs down, everything. All the major components are down. Amazon's down 3% to start the day. In Square and Twilio are smaller components, but they're still leaders right now. And NVIDIA is a smaller component too, but it's a leader. And those are 10, 11% down. It needed to correct. How did that correct in the first minute? They all bought the hell out of all those stocks at the open, and they sold the index down. So you saw the index come in a little bit, and those stocks rip higher because it was just out to lunch. So you get those opportunities, and that's where I was saying these stocks are opening too low, and that's why I was comfortable being in those stocks, and I got paid for it because I'm in Square, I'm in Twilio, I'm in all those things, and I'm like, sit back, relax, because they're too damn low, and I'm shorting the Qs against. I'm trying to mimic the index as best I can with 20 or 30 stocks, but I'm like, I had to stop myself, because in the first opening seconds I'm like, oh, this is going to be ugly. But sit back, and I sit back for 10 minutes, and I'm trying not to trade out of some of the stuff. And you could see it. And then I actually caught myself trading out, and I made some good calls because I was long a whole bunch of the more defensive names. And, you know, I bought those in the pre-market because some of those were trading down. But you could see, well, if they're going to buy all these, you know, Momo names off the opening tick, they're probably going to sell all these defensive names that are trading higher. So I was able to get out of my Procter & Gamble and bring up the chart of PG. I was long that stock from the pre-market because I was like, this is the stock they're going to, you know, buy if the market remains weak. But it didn't. And market remained weak, but those momos got bought. So I was able to sell my Procter & Gamble trading up. I was able to sell Mondelez trading higher on the day. I was able to sell a lot of these defensive names higher because I was able to identify quickly that it's going to correct by the momos coming up. And that means the other names are probably going to come down.
Do we got some news? Do we got some news at Procter & Gamble this morning? Because it's trading down 60 cents. 46 cents because
opposite market.
Yeah.
And there's the reason, I don't know if there's news, but the reason, if there is no news, I haven't checked the news, but if there's no news, the whole reason is this is the stock where everybody was hiding. We got a risk on day here, guys. When it's risk on right now, this stock gets hit because it's a risk off stock.
Nick helped me with that one yesterday because I've been shorting at 88, 89, 99, 192, 93, 94. And then, just off the open, I just plugged my nose and put on a few puts on it. And I was immediately down after it. And I just said, I'm not looking at this one until it takes out 94. And it just kind of trickled. But my weakness, like if the market's going up, I got to be long everything. If the market's going down, I got to be short everything. And I think that's one thing, you've helped me with over the years. It's like, okay, I'm very comfortable being short the stock. I don't care what this, the higher the SPOOs go, the more they're going to sell the stock. But keeping an eye on 9150 area, I had that was a area of a double low. So we're only down on 3,000 shares. Not sure if this is going to continue. If you do get a little rally, the close was 92.10. But
if we stay risk on, this is a stock you do not want to be in. Like people think everything goes up. They don't. And ETFs are controlling this whole market. They really do. Like think about, what I just said. I look under the hood and you see what's happening. And because these stocks are in the index, they're going to do certain things. It all has to add up. We were saying the math has to add up. At 931 or 932, the math all of a sudden adds up because all the stocks are open. So now the math of the 500 components of the S&P have to equal SPY. The math of the 100 components in the Qs have to equal, the Qs. So it all has to add up. And when you have so many different ETFs and so much different arbitrage going on, they're going to sell. If the stocks are, if the major components are all too high, they have to sell the other stocks in the index to make up the difference. And you have, like we've talked before, non-tech components of the Qs. That's why those move so opposite, like KHC and that moves so opposite to the overall market. It's because of the ETF arbitrage that's going on. So people who, it's just outsiders that are saying, oh, ETFs, that doesn't control the market at all. It's all controlled by ETFs. It's all arbitrage. I'm doing the same stuff. I know this because I'm doing it. I mean, the ETFs, whatever is making up the ETF, it sounds asinine to say that, CSX or CSX had a bad day yesterday. Look at CSX. It had a bad day yesterday, not because the S&Ps were getting hit, because it's non-tech in the QQQ. That sounds ridiculous to say, but it's the honest truth. CSX will get hit on a day where all the other momos are going up because it's in the Qs and the math has to add up. So if they're buying the hell out of all the hardcore momo techs in the Qs, they got to be selling other stuff. And that's why they sell a stock like CSX. It's in the Qs, and there's, about 20 components that are really not really tech stocks, even though they're in there. And those will tend to move opposite on these wild days.
I just want to say one other thing, too, and maybe, Spencer, you should pull it up for an article. Like right near the end, you were joking, and you were like, 1 + 1 = 5.
I said
right?
that.
Was it you?
Yeah, I said that.
Spencer, you should write that up.
In the pre-market, that happens. And that's why I come in and I'm like, well, I can take a guess that this math isn't adding up and I'll take advantage of that price, of those, inefficiencies. But at 931, 1 + 1 = 2. Once all the stocks are open, and on the NASDAQ, they open pretty instantaneously. But the New York, they take time because still, a human being involved to a certain extent. But, you see a lot of New York stocks sometimes don't open till 2-3 minutes if it's really wild. They don't have to open at 9:30 on New York. Might not open until like 9:33. NASDAQ, they pretty much all open at 9:30 because it's all automated. So, but the math after, everything is open is going to add up. And if it's, not adding up, there's an inefficiency there where arbitrage traders will try to extract that inefficiency and make that money.
And yesterday we were saying how bad a day was to report earnings. Didn't matter good or bad if your report was whatever your report said. It was just a bad day. And likewise, today it seems like it is just a good day. It doesn't really matter what your report says. See Foot Locker as Exhibit A. They reported after the close yesterday Q3 EPS of 95 cents. It was a 3-cent beat. Sales slight beat as well, 1.86 versus $1.85 billion. So nothing wrong with that report. It's good, but it's not bad, I should say, but look at that. Look at that pre-market chart in Foot Locker. Holy cow.
Taking off. And you know what a better example here is Autodesk, ADSK. Tech stock. You got, everything happening. Intuit yesterday reported a hell of a quarter. Jim Cramer said it. I said it. And I also said yesterday, I'm like, how long is it going to hold up for? Because you know why? It was reporting on the worst possible day. Intuit was up after hours, going back not to last night, but the night before, was up 12 or 13 points on their earnings report. It gave it all back and tanked. Not because of anything Intuit did, but because it reported on the wrong day. Autodesk is reporting on the right day. Similar quarter, blowing away good numbers, trading higher. And you might say, well, how long is it going to hold? Check out the market. We're all of a sudden a little bit more risk on. That means it can hold up today. So first thing is all about sentiment. Spinner and I talk about this in the chat all the time. It's all about sentiment that day. And if you're on an awesome day where you're buying the hell out of everything, then we'll find a reason to buy the stock on the earnings report that goes with the sector. They just find a reason. And if it's the opposite, which it was on Intuit yesterday morning, Intuit was a victim of reporting one day too early. Crazy market. That's honestly what I believe, and I'm fairly confident I'm right.
Let's just we just covered about 4 stocks there, but first let me go to Foot Locker. Someone asked about it earlier. Up 691 at 53 even. We're going back to the scene of the crime where you gap down from 53.20 to 48.32. That must have been on another report. You're filling the gap at 52.32. Boy, I just have to look at that 53.5 level from August 23rd. That would be a target. I think it traded up a little bit higher than that. Yeah, it traded up to 54. So actually, you got a 54.90 print. I don't know who the hell bought it up there, but that 53.5 to 54 area to me is an area of resistance. You pile through there, you keep on going, use your half and whole numbers. The longer it takes to get over 54, then I think you might have a little bit of a fade. Where to buy this on a decline, and we'll have to consult Jeremy Newsom on that one because I had no idea. We're not going to fill the gap from yesterday. So 53.5, 54, that's my area of interest in Foot Locker. Autodesk has a little bit easier of a chart to look at because you have congestion here. You have a series of highs, 134.5, like to 136. You've stopped at 135. So to me, you're opening into resistance here. But, once again, if you're shorting this thing between 135 and 140, not much place to hide. And then what other stocks did Dennis hit on that tangent?
Those were the main two they reported.
Okay.
Intuit was yesterday, but Autodesk and Foot Locker were the earnings from this morning. The other one, I guess since we're on the earnings parade here, is a Deere & Company. John Deere reporting Q4 EPS of 230. That missed the estimate, which was 245. As I pull up the chart, sales 8.34 versus 8.58 billion. So a miss on both EPS and the sales for the quarter, and they are hitting this one. So, I don't know.
John Deere. Okay,
they're hitting it. That's what sort of time I accidentally typed Deere in the chat. So ignore my DE that I just typed because I was trying to bring up the stock here and I was logged in the chat as you go back and forth here. They're hitting it. What's the low here, Joel?
The low is 131.93.
It's off the lows. That's the good news. The better news is there is support down there. So that's where your support comes in. They're reporting on the right day. So it's a pretty disappointing report. Correct, Spencer?
Yeah, they missed
from a fundamental basis.
Fundamentally, they missed the estimates on the EPS and the sales. So that's not good.
Yeah, when you miss sales, they normally hit you. They're not hitting it that hard, though. And the reason for that is reporting on the right day as well. They would report this yesterday down $10, $15. But because they're reporting on the right day, It's not down much. Can it come all the way back? Maybe, but it wasn't a great quarter. So that you still got to analyze it. I mean, the numbers do mean something. I don't want to act like the numbers mean nothing. You know, when you lower guidance, usually your stock's going down no matter what. Did they say anything about guidance?
Not that I'm seeing.
I'll go try to take a look there too. Joe, break down technicals. I'm going to go dig in the report a little bit too.
Yeah, real quick. The early action took you down to 131.93, but you quickly recovered from that level. Stalling out here, just like around 135. So let's see, that's going to be a potential area of resistance. 120. What's the low of the move? If you're looking for more if you could take out the pre-market low, 129.29 was your October 30th low, and then the 29th low was 28.32. But you got a nice bounce here, $3-4 bounce. So this makes buyers like, okay, maybe this pre-market low is going to hold as the low of the day, and you'll find buyers ahead of that. Just overall, not a great looking chart here for Deere, but as you said, reporting possibly here on the right day.
They're cautious on the outlook. They actually did lower the EPS guidance to a certain extent here. So that's not good news. That's why Deere is trading down here on a day where everything is potentially rallying. It is a risk on stock. It is holding up better. Report on the right day, unlike poor Target yesterday, which, didn't do a great quarter, but holy cow, did they take it to the woodshed and just punish it. You basically yesterday, if you're reporting a miss, you got annihilated for it. So report on the right day, guys. That's a message to all the corps out there. Or maybe we should just hold off our earnings report for a day. The market's too weak this morning. We're going to back it off a day. Wait till the companies start doing that.
Hey, Dennis, we got a new person here in the YouTube chat, and it's close to Pedro Guerrero, who is a former baseball player. But he says, Dennis, what's the difference today from last week when you said fade the move? Listening today makes me believe that something has changed.
Well, we had the capitulatory event.
Okay.
We didn't have it yet last week. We were waiting for it. We had it yesterday in NVIDIA. And basically, so capitulation is when everybody says, get the hell out. I've got to get out. You got margin calls probably happening into it yesterday. You have forced selling to a certain extent, but you have people who say, I can't take it anymore. Get me out. And you can't be in NVIDIA. This thing's going to zero or something, they're saying in the back of their head. They don't know what's going on in the back of the head. But the fear has come to a point where everybody says, get me out. So all the short-term traders are like, okay, done. Get me out. I'm done with it, And often you see it, after a significant event. Sometimes it can be on the earnings report, but a lot of times it's a follow-through move. And just yesterday, it was kind of a layup. You could just see, Square is opening down 12% on no news. Twilio's opening down 12. Boeing's opening down 20 points on no news. It felt like the capitulatory event. So now you have all those people who said, I need to get the hell out, sold yesterday, just sold the bottom. They're like, and it's all bounced back, and they're so regretting that move. So now you have underneath demand where anybody who did not buy the low yesterday, and that's me in my invest portfolio, I did get my trading portfolio, but I didn't put any orders out there, are looking for pullbacks to buy. I will be looking for pullbacks to buy in the risk assets. This is only for risk assets. So stocks like Boeing is a risk asset. Obviously, Square, Twilio are risk assets. They will be looking for pullbacks to buy in those stocks. So that's why it's a little bit different here now, because I believe we already had the capitulation event. Maybe not in the overall market. And again, for stocks like Procter & Gamble, stocks like, that have been running up and money hiding in those, I don't want any part of those things right now here, especially if we're going to stay risk on. Could they bounce back? Could we have a little, what I would like to see, potentially if I'm looking from a Procter & Gamble, I would like to get short this. Maybe we get like a little sell-off happens intraday, or maybe we get, some pullbacks in some of these stocks and they say, okay, it's going back. We got to buy Procter & Gamble back. Then I would strike short. But I think the top is in PG. I think 94.81 is a top that we won't. I think we'll maybe get back to the 93 handle. We're not far from it right now, but I think the top is in. I think the top is in Coca-Cola. Huge reversal day yesterday. That's the day. So now I look at a stock like Coke, 50.82, open at the high. And then the market realized, they're going to buy Square and NVIDIA. Well, you better be hell selling Coke. Money's got to come from somewhere, rotates around. So they turned around, they hit Coke all day long. It was, a ridiculous move here in Coke really in the last month. Coke moves $2-3 all year. It moved $3 in the last 3 weeks. It's a big, or $5 in the last 3 weeks. A huge move. So, and that red candle tells me moves over. That's like and that's my opinion. Obviously, I'm not going to be right all the time, but I feel like I'm going to be right here. I think you get back up near $50 in Coke. I think there's sellers all over the place here. So if I was in Coke, if I was in Procter & Gamble, I hide all my money there, I'd be trying to work out of that on any type of strength. So, and I will be trying, I'm not in those stocks, but I will be trying to short those on any type of strength. The Cokes, the Procter & Gambles, the components in your XLP. You look at those, and XLP had a horrible day yesterday. I think it's going to have I think it can have some follow through here too. Also, your utility stocks, people have been hiding there. They reversed. So it's risk on, risk off. Understand the risk on, risk off assets. But I feel like it's different this time because I feel like we had the downside capitulation in the momos and the upside capitulation in the defensive stocks yesterday morning at 9:30. And I think those trends now are going to reverse.
And you could have upside capitulation as well, like we did on the September expiration. Hey, Dennis, Mongo Trader wants to know how you trade so many tickers. Do you have a voice-activated platform?
No, and I use some automation. So, I am using automation to send some orders. You can't get all the orders in there if you don't. So I do use some automation, but I don't use as much as I used to. So I've backed off on the automation to a certain extent because I feel like I can cherry pick the stuff better. But you're focusing on when I get, and I'm very light today. So I'm very, actually it just worked out that I didn't have a lot of positions. It wasn't crazy action overnight, a little bit of action. But, most of the move happened, when I was sleeping after 4 o'clock or after 8 o'clock and when the stocks were closed. So I don't have a crazy amount of positions in it. But a lot of days I come out 50, 60 stocks, overnight trades I'm going to get out of. And what I do is I typically manage, you got to, at that point, when you have 50, 60 stocks and I may trade market neutral for the most part, unless I've really got a feel, you're just going to, be working stocks one at a time. Like I'm trying to keep, if I'm trading market neutral and, I'm incorporating betas and stuff, but I want to keep that market neutral stance. I don't want to sell all my longs and then, or cover all my shorts all of a sudden, because then my market neutralness is gone and now I have major risk exposure. I went against that yesterday morning because I had such a feel that they were going to buy all of the, Momo names that I held all my Momos, sold all my defensive, and probably had a ridiculous amount of exposure not a ridiculous amount, but a lot more exposure than I would like as a market neutral trader in the first few minutes. But it was because I had a feel for it. And I took a chance and made a call. And that's why I was able to extract the excess alpha a lot more than what I would typically extract. So, typically I'm trying to extract just the differences that I see in the inefficiencies in the pre-market. But that was a call I made on the show, a call I made on Twitter before, the open that I thought the washout was there. So I played it that way. So I held every single Momo name that I had long overnight, and I covered all those defensive names. So, and it was the right call. And my P&L went way up because of that. So what was the original question? Bad tangent. What was the original question?
What was the difference between this and
last week?
Hey,
wait, no, he answered.
That was a long time ago.
You answered it.
That was on. That was on yesterday's show.
Yeah, right.
Any imbalances, Dennis? Real quick, we are trickling a little bit here.
On off the press. Well, 4 minutes ago off the press. They're small. They're small. Institutional money managers probably holding their orders pretty close after all the wild swings. But I do see Square small sell and balance. That's going to flip to buy. 30,000 to sell, but I don't think that's going to last. Although Square is coming down a little bit because of that. It's only up 3% now. It was up 4.5% earlier. You know what? They're so small, they're not even worth looking at. I don't see anything really jumping out at me. That's like, whoa, that's a huge amount.
And the one thing that both chats have pointed out now, and it's worth noting, is that it helps when you get a positive news flow, and that happened with NVDA yesterday and again this morning. So so yes, the sentiment turned, but also positive headlines helped. Citron tweeted bullish. He was bullish NVIDIA yesterday at around 10:18 a.m. This morning, you have a report from Reuters that NVIDIA is going to provide an AI platform for Chinese electric vehicle startups. Both bullish headlines, both help the stock. So it never hurts when you get one or really more, any type of bullish headline on a day like yesterday when the sentiment in the stock turned. So
completely agree.
Totally helps.
Completely agree. And so when you get bullish headline, you get. I mean, Citron's along the stock. In long run we don't know, but short run it usually gets a lift from that. It was perfect timing because it's all of a sudden everybody washed out on the open, and they come out tweet a few minutes after. They time that. I mean, they waited to time that call. So it's not like they just all of a sudden buy it. They timed it perfectly. They could see a squeeze happening on anybody who had been short NVIDIA. And not only that, they could see that there was desperation to try to get it long if you missed it on the opening, print there, because it rallied so quickly. So they timed it perfectly and then held it up, and that helped out all the momos all together.
Let's go get Mr. Weiner.
Yep, we're going to take a quick break and grab Ian Weiner, the former director of equity trading at Wedbush Securities. We'll be right back in a moment with Mr. Weiner. All right, welcome back, everyone. As promised, we are now on the line with Ian Weiner, the former director of equity trading at Wedbush Securities. Now, Ian, what can I call you now?
I guess you can call me a global citizen.
Okay.
Probably the best way to describe sort of what I've been doing and what I look to be doing over the near-term future.
You are a philanthropist. I can't even say that. Tongue twister, right? I should have practiced that.
Well, yeah, I don't know, but certainly not what I was doing. How's that? That's a good start.
So, just real quickly to catch people up, he's been a guest on our show several times over the years, managing director at Wedbush Securities, which is one of the major Wall Street firms. And you're a fairly young man, 45 years old, and you just said, I'm done, right? So was this something that you had planned out, like when you were 25 years old? You said, you know what, I'm going to work on Wall Street, and then I want to do some good. I want to make a difference in the world. Or was just something that just kind of came up in an instance?
No, I would say it's something that developed over the last year or so. I've been thinking about a lot of different things, and I think I got to that point in life where a lot of other people get to, where they start to think about their purpose and why they're here. And I realized that there were a lot of things that I wanted to do in my life, and I didn't want to wait till I was 70 to do them. And I got to a point in Wall Street where after 22 years, I just didn't feel like I was learning as much. I didn't feel like I was challenging myself really. And I didn't feel like I was truly doing something for the world. And so last Christmas, my wife and I had a long conversation, and with her encouragement, she just said, why don't we just go do something else for a while? And so I circled, May 15th in the calendar and said, okay, win, lose, or draw. This is my last day, and kind of held to it. And that was the day I decided that I would resign and go do some other things to try to make a difference on the margin.
Now, what you're doing is the interesting thing here. I've been, I'm reading Weiner Wall Street Walkaway, but you just didn't go down to Boca Raton, Florida, and hang out in the sun. That wasn't your idea. Tell our audience what you've been doing over the last few months.
So my wife and I flew to Indonesia in August. And we spent the next 3.5 months in Indonesia, then Malaysia, then Thailand, doing a variety of volunteer work. So we did some sea turtle conservation. We did some island conservation. We taught some refugee children in Kuala Lumpur, Malaysia. We taught them English. We worked with orangutans, and we spent some time on an elephant sanctuary helping to care for them in Thailand.
That not much different than working in the pits in the S&P 500.
The metaphor probably stands. Yes, I think some of the animals are probably a little bit more civilized, but it was definitely some of the same type of characters one might see on the pits.
And just from that perspective, I mean, were you working with children? Were you working with adults? Was it a mixture? A mixture.
It was a mixture, but I would say that some of the most impactful stuff we did was with these children who were refugees from Myanmar, the old Burma, who were running for their lives and wound up in Malaysia and were learning English. And we had the opportunity to go there and had an expectation we would be teachers' assistants. But, of course, it's never what you expect. And so when we showed up, they basically just said, "Oh, you guys ready? Great." And just kind of put me and my wife into different classrooms and with no real syllabus and just said, help teach these kids English. So it was definitely exciting and challenging and stressful in different ways than I had been used to over the last couple of decades.
All right, Ian, you were in Indonesia, as you said, so I guess I'll cut right to the chase here. The most important question on our minds is boots on the ground. What is the cryptocurrency scene like there?
I saw one trading house in Bali where I could go to trade crypto, and I walked in there. And it was empty. And so I don't know, this was a few months ago before it really kind of took a nosedive, but it seems like fewer and fewer people were talking about it. And not one place I went to in the entire 3.5 months mentioned cryptocurrency or paying by cryptocurrency at all.
So have you been like keeping up with the market here, or are you like sort of blissfully ignorant of everything, or what?
I was until about 2-3 weeks ago. And then as I really we didn't have TVs anywhere, and we had spotty Wi-Fi at times. So I really couldn't have even watched or gotten involved if I wanted to. But the last couple of weeks I've been watching it, and obviously there's been some gyration that's kind of brought, more people interested in what's going on. So I would say the last few weeks I've been keeping an eye on it and just kind of getting, having a little bit of missing sort of what would be exciting times back on the desk.
That's what I was about to ask you. Do you miss, with the volatility up the past month or so, does it make you want to come back? Not that you're gonna, but does it make you want to, miss trading?
There's an element of it that I miss. Certainly the excitement, certainly, my my ego, a lot of different things, that sort of appealed to me about it. But, I would say that sort of after this trip, and it's been a little over 6 months now since I left, I've been able to kind of take a step back, a few steps back, and really realize that, I think what I'm supposed to be doing here and my purpose is something a little bit different. And, it's whatever that excitement and sort of energy that I miss, is more than offset when I'm sort of doing things where, I can feel like, even though it might not be in the Wall Street Journal, I can have an impact on people and do something that I feel is helping to kind of give me a reason for why I do.
Do you have like one experience or one story you could share with us that man, I am so glad that I did this. Do you have one particular story or person that could you share that with us, please?
So, we were in Bali, and we were, and believe it or not, contrary to sort of what people's perceptions are, Bali is really just, covered in trash and plastic, and they burn plastic, and they really don't have a whole lot of programs in place in order to do anything for the environment. And so, we were out there, and I was out there on the beach with gigantic garbage bags, picking up all kinds of trash coming in from the ocean. And as I was doing that, a little kid who probably was no more than 5 or 6, came out onto the beach with a little bag of his own, and started picking up the trash next to us. And, we had a few moments like that, but it was like, oh, wow, that's interesting. Here's a little kid who perhaps is going to try to, make the world a little bit better, and we're leading by example. And we ran into, a number of kids that were taking gap years. We worked mostly with 18, 19, 20-year-olds who were passionate about making a difference. And it was encouraging because, I'm the first one to be like, oh, these generations and blah, blah, blah. But, they really had a passion and really cared about what's going on. And it gave me a new perspective on why it might be a great idea to take a gap year after high school as opposed to going straight to college.
All right. Well, we gotta talk to you about the markets here just a little bit. And I talked to you last week, and I just remember what you said, and you were like, man, things just seem a little bit different. And you had mentioned that the buy the dip mentality, but it just kind of feel like it was like a little bit more of sell the rip, and that was actually pretty good advice over the last week or so. But just you've seen the incredible returns in the markets over the last few years. And now we finally got some volatility, a little, changes in the administration here. What's your long-term outlook here, for the markets? Is that perspective of being away from it, coming back, seeing volatility reappear? Just give us your outlook, both short-term and long-term.
Well, I think short-term, my thought is that you're going to get, one more flush in the market, probably down another 3 to 5%. And then, you're going to see a really nice rally into the end of the year, probably starting end of the first week of December. I think what's going to happen is one of two things. Either the China situation is going to improve, either in reality or the expectation is going to improve, or when the Fed meets in December, given market volatility or whatever it is, they're going to tone down their hawkishness into 2019. And I think people may reset their expectations for how many rate hikes are actually going to happen. And as a result, people are going to sort of get a little more comfortable with stocks again. That's the short term. And you may get a retest of those highs. It would not surprise me if December, January, you sort of get a retest. After that, I think you're going to chop around for the next, couple of years, because I think that it's just things are going to continue to kind of grind to a halt as far as these pro-business, anti-regulation kind of policies that have helped propel us to where we are here. And I think for people to get returns, it's going to have to be a lot more on sort of the income side than it is necessarily on sort of capital, gains. And I think, it's just a question of what people's outlooks are. At 45, I think relatively down the fairway, I have 30% in stock and 30% in bonds and 30% cash. And it just feels like, if you can get comfortable with sort of 3-4% returns, that's probably what we're looking at, unless, something big happens with China. Either way, that to me is sort of the biggest, variable. And coincidentally, spending time in Malaysia and Thailand and over there, you see how important China is to the entire world. And so if something happens there on a negative side, then I'll be wrong. And the market could go down 15, 20%.
All right, we've been on with Ian Weiner, former director of equity trading at Wedbush Securities, now the author of the Weiner Wall Street Walkaway newsletter and global citizen. I'll call you a global citizen, which I think you said earlier. But Ian, thanks so much for coming on today, and have a good holiday, and good luck in wherever your travels take you next.
I appreciate that, guys. Thanks for having me on. Have a good holiday.
All right, here we go. We are pulling back a little bit. Your pre-market highs, 26.67. I was hoping for this 26.70, 75. That was Tuesday's intraday high. We still got a shot at it, though. We're only 11 points, 12 points away from that. So let's, Dennis, you seeing anything here? Any sellers coming
I
in?
just want to say, that was inspirational to me, though, just to hear Ian like that. It's something that I think about a lot, too, obviously, I'm trading as a living, but often, I struggle with this. I don't know if you did too, Joel. It's like, all right, I'm doing arbitrage and stuff, but is this really like making the world a better place by me providing liquidity to the markets? I don't know. But, it's something that, I've, struggled with a little bit. Like I've been in this business for 20 years too. And, just props to Ian to be able to just walk away from it and go do stuff like that. I think, I'm just at a situation. I got the 2 young kids and still trying to make income for the family. And this is the best way that I know how to make income. So I think I still need to stick to my day job, but I would love, at a certain point in time to be able to follow in somebody's footsteps like that. So that was just very inspirational to me. And I think it's important sometimes to just take a, step back and, give, credit where credit is due. I mean, that was a gutsy thing that he's done. And, congratulations for him to doing that and being able to do that. And something that I would love to do one day in my life as well.
And in unrelated news, Friday will be our last pre-market show. Dennis is going to go off to Iceland. Joel will be in. Joel will be in
Iceland. You're sending me to the cold place.
Joel will be in Zimbabwe. I myself will be in Argentina, and we will. We'll
wait, we can't connect on Skype that way?
I'm sure we could.
No, I'm the same way. For me, it's working with kids and the opportunity to to swimming and coaching. And that's, I like the opportunity. I'm going to do some swimming this weekend with some of our friends' kids. They're in high school, they're up and comers, spend time with them, try and, get them fired up, do some of the events I did. But yeah, I mean, it's a little bit different. We threw you guys a little bit of a curveball here.
Right, but we thought, the day before Thanksgiving, it's going to be quiet. What could possibly happen the week of Thanksgiving? Nothing interesting ever happens this week. Well, what do we know?
Right. So let's get to the markets. We got 8 minutes left. Did we cover all of our earnings reports?
We did, actually. I think there's
not very many there. And ratings, we could cover these in about 10 seconds too here, because let's give some perspective. You're an analyst and you've got this great research report that you just written on some stock and it's going to be a buy. Do you want to really publish this when the market is like whipping around 3, 4, or 5%, in swings, or, I wouldn't, or your specific stock? Maybe you've got a great report you've written on Square. I would wait till the volatility. I'd sit on that report for a few days and wait till the volatility settles in, because you could have, some great fundamental analysis and then be a victim of just overall market moves. So that's why you see the analysts very quiet here. Yes, it's Thanksgiving week. They're typically quieter this week too, but we've been talking about the quietness in the analyst ratings for the last couple of weeks. Not very many bold calls. And that's simply because it's a tough market to make a bold call in right now on an individual stock, because the overall macro picture is moving the stocks around a lot more than sometimes even their own individual news.
You know what? We did miss a couple of reports here, or a couple stocks in the YouTube chat. People wanted to know back. BZUN.
Oh, yeah, that's right. Okay, so
we're going off the board on this one.
This is another one of those Chinese e-commerce names, and they reported earlier this morning here. Q3 adjusted EPS 13 cents is a 2-cent beat on the estimate sales of 161 versus 158 $1 million. What kind of guidance did they give?
They give guidance.
They did give sales guidance, but I don't know how it compares to the estimate, if there was one. But the point is, let me get the chart up here, BZUN. The point is, this one is ripping this morning.
Yeah, it's up 330 at 317, just coming off a fresh low of the move yesterday. My area, it's only at 33.30, but to me, the point of control here will be 34.40. It kind of looks like 35. Is there something closer to 35 there? No, I see a couple highs, 34.17, 34.40, and then you get into that big gap area. I don't know what happened a couple days ago, but you're gapping up from 34.40 all the way up to 38.61. So you want to see it get up there, get in that gap area, and come in, just keep on going. If you're looking on a gap fill here, you got to hold out for $3 lower. 30.65 was yesterday's high. And I don't know, just for me, just like I couldn't get super bullish on the stock until it takes out 35. Someone also
reporting on the very right day. China is hot as hell here this morning. FXI is trading up 2.3%. Alibaba is trading up almost $4. Baidu is trading up $3. I mean, reporting on the right day if you're a China stock. So, props to them for picking the right day to report. But yeah, I could argue, like, maybe it was a washout day yesterday there too. You got a major breach of support. It comes back up in here, and But if you get back up over $35, it's not something, I don't know if I feel like coming in here and shorting the stock. I'll just say that. We're sitting on the hands here.
Yeah.
I'm not fade. Yesterday, I'd be fading the rip on this. Today, little different story. And maybe this are going to be the rips to fade, and we've had some pretty good pops here too. And you know what? If I bought a lot of stocks on the open yesterday, I would be lightening up into this because we've had it's been a pretty wicked 2-day moves. I mean, NVIDIA, let's put it in perspective too, and we're going on a tangent here. $133 yesterday morning, 154. It's 21-point rally here, guys. They're coming here buying these things now? Now I think you're late to the party. The time to strike was yesterday morning, and now it's like, okay, well, we maybe back and fill. Maybe on some of that backing up, maybe that's where you fill your trading portfolio, your investment portfolio. But I'm not so sure that I'm just chasing something that's straight up 20 points in a day. And this same thing, you're up 10% overnight. I've made a lot of money chasing stocks.
For me, it's Chinese stocks 1, Joel 0 after my mid-year tussle with IQ, 30 puts, 35 puts, and I ended up.
You're at the top, Joel.
I ate those things, man. I probably ate them on the day it went to 45, but anyway, so
you're about the top.
Okay, what about Gap Store? GPS, did they report?
Yeah, they did.
All right.
Was that this morning? Did I just
last night?
Wow, you're right. Totally missed that one. Apologies for that. GPS reported Q3 EPS 69 cents. That beat by a penny. Sales of 4.08 versus $4 billion. So slight beats on the Q3 print. They narrowed their fiscal year EPS guidance, but it still came in within the estimate.
Not a great report, not a bad day to report either, though. So just kind of hanging out. I'm torn on this. Let's go to yesterday's low for your first trade.
Yep.
Yesterday's low, 24.25. Let's see what it does there. It's kind of went through there after hours. It's kind of bounced back. It was kind of yo-yo chart after hours.
Just sitting there. It's just
sitting there. Yeah. So if it takes that out 24, maybe it gets uglier. Fundamentally speaking, I don't want anything to do with the stock. I don't want it in my investment portfolio. I think I'm just not a fan of Old Navy in the Gap. Even though I have some Old Navy clothes, I just don't think these things are like your growth businesses that I need to be in with my investment dollars. But we've been dogging the Gap for a long time. I have been on this show. Pretty much every report I say I don't like the company from fundamental basis. And I was wrong for a lot of 2018. It went from 22 to 35 in my face. It's come back down here. So support, $22 where we were April, May, June, July, August of 2017.
There you go.
Get back down near that area, maybe a strike, but I'm just probably sitting on hands on this one.
23.93 was your low in September, first week of September in 2017. Then you drop off to 22.98, 21.94. But you're opening at a good level here. If it can hold, chance for a rally. Also, wouldn't get real enthusiastic until at least went green on the day. Yesterday's close 24.66. And one more stock here from the chat, and we probably talk about GE more than anybody here. And someone was asking.
I don't know. CNBC talks about GE a lot.
Really? Really?
CNBC
Okay.
might have
someone I think do we think that there's a bottom here in GE? And
I don't see any formation of a bottom. Do you, Joel?
Well, I see 3 lows in the same area, if you want to call that a bottom. But new low of the move yesterday at 753, closed at 765. So if you absolutely have to, try a swing trade, you need to cut out probably big bids at 750, just under that 753 low. But here's an interesting stat here. I'll get interested in GE when it makes a daily high over $8, Dennis. Yesterday's high, $7.86. So now one day in the session did it trade over $8 yesterday. That's not a good looking chart.
I mean, people have been trying to call the bottom in GE for 2 years. Every single rally has been a selling opportunity. So why is it different this time? Trend is not your friend if you're trying. Eventually, there will be a bottom. I don't know where that price is, but I'm thinking it's very difficult to call. And I've already said, until Inch comes out and says, I'm buying GE and I'm raising my price target and raising it up to a buy, that'll be the day that I'll be interested in GE.
Yep.
So we got the Inch indicator on this one. Inch still says this might go to $5. That guy has been right the whole time. He knows a hell of a lot more than I do about this company, and I'm sticking with Inch.
Alrighty, that is going to be it for us today. Obviously off tomorrow, but we'll be back with you guys on Friday. If you missed any part of our show, catch our podcast. We're on iTunes, SoundCloud, Stitcher, TuneIn, and Google Play. You can just or rewatch the show on YouTube. Just search for Benzinga or PreMarket Prep on any of those sites. Once again, today's show sponsored by Wealth Venue. Bring them up on the screen right now. They are the autopilot investment platform for everyone. Wealth Venue will structure, trade, and rebalance your portfolio so you don't have to worry about making the right investment decisions. So to learn more, go to wealthvenue.com or click on the link in the chat that I'll put in there in a second. Once again, as always, please remember that all the information and content from our show is for informational purposes only and not meant to be investing advice. Everyone have a good Thanksgiving. You guys got anything special planned tomorrow, either of you? Or not Dennis, obviously.
Yeah, we celebrate.
Okay.
I'm actually going to the Wings game. I'll be at the Wings game tonight.
Oh, nice.
Not going to the Lions. You going anybody going to the Lions game?
No, we're gonna be watching the parade here from
you'll be in the office.
The world headquarters. Yeah, I'm coming to work tomorrow. Should I do a show tomorrow? Maybe come in at 8 to 9.
You can do it by yourself.
Go to Spoos, and I'm sure people would love that. But no, just football. I'll get an early morning swim in, the parade, eat a bunch of turkey, watch the Lions, eat some more turkey. And that's about it. So thanks a lot.
Gobble, gobble.
Yep.
All righty. Have a good one, folks. We'll see you on Friday.